Hello, YouTubers, friends, compatriots, bootlickers, shields, dust, lasers, peasants, vassals, gold bugs, ex-gold bugs. I'm a useful idiot, and today I want to talk about the great 2013 gold crash. And what an epic event. The fastest drop in gold prices in 30 years. Dropped 15% fall in 2 days, and silver down with it. And now everything's been sorted out because there was a lot of rumors about Goldman Sachs warning about a month ago, and Cyprus maybe selling their gold. And but the most interesting tidbit to me is that supposedly 500 tons of naked shorts were put into the market on Friday, and that would require a coverage of $24 billion. So who has that kind of money, and what would be the motive? And so as it turns out, apparently a lot of insiders already knew that this was going to happen. There was a lot of warnings, and they were all apparently warned that it was going to be a central bank intervention. So this isn't exactly speculation on my part anymore. This is apparently what's coming out. And it makes a great deal of sense that the central banks would intervene. And I also don't think it's a coincidence that we had the huge collapse in Bitcoin not too long ago as well. It seems like the champions of fiat currency are taking the wind out of this alternative currency. And so, of course, immediately the dollar strengthened because it's looking like a haven again. And there's a number of reasons why this would be. But let's get back to the gold crash a little bit. So now it's hovering around $1,400 an ounce, and it's still up traditionally for sure. And so I think people should think about that. But also we could also see it lose further value. That's certainly true. And traditionally there's been a slow recovery in gold, and it goes in long cycles. And in fact, it's actually historic how much gold has been worth in the last 20 years and previous to that. But that said, we can't rely on any traditions or any events that happened before, because we live in different strange times. Things happen. So we have this bear raid on Friday. We have the price of gold and silver suppressed almost instantaneously. And this in spite of all the money printing. So all the quantitative easing and money printing that's going on in Europe and the UK and China and Japan and the US, you would think would be generating a lot more move into gold. And they suggest that one reason why there's been a move out of gold was first the fact that there really hasn't been that much inflation, relatively speaking. But that's only because real inflation has been disguised, and the numbers have been cooked. And there's a lot of stealth inflation out there as well. So to say there's no inflation is, of course, pretty crazy. But that said, I guess with all the money printing, it doesn't seem like there's that much inflation. And all the fears about hyperinflation have certainly subsided. And then we have all the central banks buying more gold in the last couple of years than they have since 1964. So they're all loading up on it. But that also makes sense why they would want to suppress the price in order to buy more gold at this point. And a couple of my theories as to why the central banks would intervene as well is central banks are very interested in getting sovereign gold. So we could see a lot more pressure on future bailouts, particularly bigger countries in Europe. If these contractions continue, and it looks like they will, then central banks will want to get a hold of the sovereign gold of those nations, and they'll want to get it at a good price. So that's another thing that's interesting about this timing. And another aspect of this, and it's another reason why a short-term speculation in gold, which is what the institutional investors generally are interested in, at the top, the recovery feels in to them. And it should. And all the signs we've seen, record profits and huge bonuses have returned, and all the corporations and banks are flush with money and nobody's lending. And so there's no reason for them with that kind of asset level to necessarily think they need to get into gold. But the bottom line is ultimately the price was driven down by just spooking the herd. And I go back to the original theory that a 500-ton naked short was put in the market on Friday. It was a central market intervention, and that's what this is about. And the ensuing panic, and it worked like a charm. And but for those who are not speculators and those who are interested in something that's going to hold wealth, then gold is still a good bet. And certainly those who are paying attention are seeing that we're not out of the woods yet in this ongoing depression. I still consider it one if you look at the real numbers, but it's a depression in the same sense that the last depression, all the people at the bottom in the middle class will suffer, but the people that were instigating this destructive capitalism from the top do quite well. And they're doing the same here, certainly buying up a number of assets. So we still have a feeding frenzy going on with all the cheap money and the speculation, and there's no end in sight to this. So that's another reason why things are good and the recovery feels into them. And they know that interest rates and cheap money will continue because raising interest rates will blow the entire system up. And so we have the permanent corporate nanny state, and that's another reason why they should relax. But, there's also a number of other factors in play. Somebody knows some big things are coming up, and certainly our society and the world is changing every day. So something could be coming around the corner. And investment is at a relative low level, so there's not much lending going on out there, and inflation remains hidden because the money doesn't make it out into the economy. So that's another reason why the inflationary forces are masked, even with all this money printing, because the money isn't going anywhere. And there's a lot of pressure on labor, and labor is flat, and the demand for goods is moderate. So that's another thing that keeps inflationary pressures down. And these gold and silver movements also help the big banks cover their positions. The theory that J.P. Morgan had a lot of short positions in silver, and this will certainly help that, if that helped them, if this turns out to be true. And then there's a theory, too, that the Federal Reserve needs to lower prices so they can buy gold to cover the fact that Germany wants to get their gold returned to them. And if they don't have it right now, which is highly probable or highly likely or possible, then it would behoove them to drive the price down in order to load up to cover that. So, just as a sidelight, there's actually an interesting fact that came out in a study recently that supports the fact that the recovery feels into them at the top, and that is that profit is a share of income in the U.S. is at a record high. So that means the total amount of national income is going to profits instead of wages. And that's just a fancy way of saying that the wealth has been transferred. And 25%, very, very high, 25%, the highest level since 1951. And if you factor in after-tax profit share, it's the highest since the 1930s. So that means taxes are pretty low for them, in spite of everything you hear, and that a lot of wealth is being transferred to the top. And not only that, it's being transferred in cash and real assets and real wealth, and a lot of it. So there we have it. Here's a little snapshot. I wanted all the information to come in before I commented on this dramatic move in gold, and certainly nobody is willing to put a bet on what's going to happen next, speculate as they may. I'm a useful idiot. Don't you be one too.